Hello friends, welcome to Hamsa Accounting. To understand the topic in hand in a better way, let us first have a look at a couple of examples. In our first example transaction, TRD Sports, the business unit under consideration, sold some 75 odd footballs at Rs 450 each, and TRD Sports received the money in check. Now the total value of the transaction is 75 multiplied by Rs 450, which comes to Rs 33,750. Since the business unit received money by check, we will debit bank account by Rs 33,750. This is quite obvious because the money has been received in check. Any money received through check has increased the bank balance, and any increase in asset is debited in the books of accounts. This part is quite clear. But which account shall we credit? Shall we credit sales account or shall we credit football account? In this second situation, FDC Sports Agency sold its old cricket bat making machine at Rs 6,75,000. Payment received in check. Again, the fact that bank account shall be debited is quite evident from our earlier video of rule of debit and credit. But the question again arises about which account shall we credit? Is it sales account or machinery account? This video attempts to clarify and answer these and few other questions. The learning objective for this video is to be able to differentiate between sale of goods and sale of assets, followed by making correct journal entries for each of these cases. The final objective is to learn the nuances of journal entries for cash sales and credit sales. To recall from the detailed explanation under the videos of difference between fixed assets and current assets and journal entry part 2, goods are those items which are acquired for further processing or for resale during the same year. These are items which a particular business normally deals with for reselling and for earning profit along with cash. To go back to our example given in the beginning of this video, football can be regarded as a good for TRD Sports. This is because, as the name indicates, TRD Sports is involved in buying and selling of sports related goods. So we should credit sales account in such cases. Asset sale, on the other hand, means a business unit sells an asset which was bought originally to be used in the business and not for reselling purpose. Although rarely, assets are sold by a business entity when they could not be used anymore because of normal wear and tear. So if a business unit sells an old machinery or any other fixed assets after using it in the business for a few years, then this shall be regarded as sale of assets and not goods. To go back to our second example in this video, we should credit machine account when FDC Sports Agency sold its old cricket bat making machine. Transaction number 1. Ratna Jewellers sold golden earrings on 15th of April 2022 to Gary for Rs 38,000 cash. The steps for writing the journal are as follows. Golden earrings is a good for Ratna Jewellers because the entity is involved in buying and selling of gold and jewelry. Good is an asset, current asset to be more precise. Goods sold should be recorded as sales account in the journal. Decrease in asset is credited, as we have learned in our video of rule of debit and credit. Hence, sales account should be credited. Sales account will be credited even if we consider sales as revenue because increase in income or revenue is credited in the journal. Again, if we refer to the rule of debit and credit. If we see the other side of the transaction, payment was received in cash. So, payment is received in cash and cash is also an asset, again a current asset. Cash receipt increase the cash balance with the entity, and the entity in question is Ratna Jewellers. Increase in asset is debited, Hence, cash account is debited in the journal. Therefore, the journal entry is cash account debit to sales account. In this new example, the payment is received in the bank through a check. Other details are same. So instead of cash account, we will debit bank account. The credit item remains same, that is sales account is credited. In transaction 3, the name of the buyer of golden earrings is not mentioned. Moreover, the payment mode, that is cash or check, is also not mentioned. In fact, whether any payment is received at all, that is whether the item was sold on credit, is also not clear from the statement. In such cases, where the amount is given but the name of the buyer is not given, we shall assume that the payment has been received. It is up to you whether you assume money is received in cash or check. For our purpose, here we have assumed that Ratna Jewellers received the money in the form of check. Hence, bank account is debited. In transaction 4, Ratna Jewellers sold golden earrings on 15th of April 2022 to Tanushri on credit for Rs 45,000. Here, Tanushri bought the item on credit from Ratna Jewellers. Tanushri is yet to make the payment. Thus, Tanushri is a debtor for Ratna Jewellers. We all know that debtor is a current asset and any increase in asset should be debited in the books of accounts. Therefore, Tanushri's account is debited and sales account is credited in this journal. On reading transaction number 5, you will notice that only the name of the buyer is being given. Other details such as cash sales or credit sales or payment mode such as check or cash is not mentioned. Whenever the name of the buyer is given but the payment mode, that is cash or check, is not mentioned, we must assume that the transaction falls in the category of credit sales. So Bijit bought on credit and becomes a debtor for Ratna Jewellers. Any increase in debtor which is an asset should be debited. And since Ratna Jewellers deal in the item mentioned here, we must credit sales account. In this last example for this video, the business entity sold its air conditioner after using it for some time. By now, you must have correctly guessed the journal entry. We will debit bank account as bank balance increased after selling the item. The item, that is, the air conditioner, is not something which Ratna Jewellers regularly deals in for buying and selling. Hence, this is a case of sale of assets other than goods. Thus, we shall credit either air conditioner account or electrical equipment account. We can even name the account as office appliances account. For our purpose, we have used air conditioner account for crediting in the journal entry. Hope you have correctly internalized the differences in this video. Thanks a lot for watching. Stay connected with Hamsa Accounting. Please like and share the video.